Happy New Year everyone, I'm back with my weekly videos covering the Nasdaq 100. So 2023 has started off where 2022 had left off, on the back foot as the Nasdaq 100 retested this key trend line nearly each day this week and held. The trend line being around the 10,970 mark. I've shown this trend in previous videos, which comes from the weekly chart where you can see prices held this trend as support in October last year before rebounding in November. Closing the week below it will trigger another wave of selling. This chart shows 2022 saw the S&P 500 finish lower by 19.4%. But that back-to-back down years are rare, with the exception of 1973 and 74 and the dot-com bubble between 2000 to 2002. However, you can see from this chart, 1973 and 1974 were years of very high inflation. Inflation didn't peak until for 2.5 years before falling back. You can see we're in a similar cycle, with inflation rising sharply from June 2020. During the high inflation period in 1973 and 74, the S&P 500 didn't bottom until inflation peaked. Now if we compare that to the current situation, we can see inflation may well have peaked out in June last year, with inflation coming off. But there is one difference this time. Notice the S&P 500 went up with inflation rather than down, like the early 70s. This is because of the unprecedented stimulus that was provided by the Fed during the pandemic. Look at the Fed balance sheet and inflation. Both are rising. There are other factors for inflation, but the Fed providing ample liquidity has pushed inflation higher, and it's no surprise that with the Fed tightening now, inflation is beginning to cool off. This time it's different, and we're unlikely to see the S&P 500 bottom just yet, despite inflation looking like it may have peaked. The unwind of the Fed balance sheet is likely going to lead to investors pulling back on risk and deleveraging, resulting in both inflation and the S&P 500 coming down. The Fed's balance sheet was nowhere near the 9 trillion mark that it hit last year, back in the early 70s, and that is why this time it's different. Back to the daily chart on the Nasdaq 100, one of the reasons why the Nasdaq has been hit from the off has been weakness in megacap tech stocks. Just have a look at these three names. The one that stands out is Tesla, which fell 10% in one day this week on Q4 deliveries which missed analyst estimates. Microsoft got downgraded, whilst reports continue to swirl on reduced demand for iPhones hitting Apple's stock. Price continued to fall on Thursday on the back of strong private payrolls report, with payrolls rising by 235,000 when 153,000 was expected. This will keep pressure on the Fed to keep raising rates, which saw tech stocks sell off on the report. Friday we had the non-farm payrolls, which also came in above estimates. However, price held the 10,660 support level after wage growth came in below estimates at 4.6% versus 5%, suggesting wage inflation may be cooling, which gave stocks a boost. In terms of levels to watch into next week, we can see here price holding this blue trend line around 10,970. This will remain key resistance. On the downside, 10,660 will be the next immediate support level, being the recent low, followed by 10,540. The sellers remain in control and the momentum for now remains to the downside. Next week sees earnings season get underway with big bank earnings at the end of next week. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.